get the YouTube feed started here. All right, everybody. Good morning, good afternoon, good evening. Welcome to DYOR Live here on the DYOR Media Network. My name is Tom, otherwise known as Striking, here in the digital media universe. So glad to be hosting another episode of this great show we call DYOR Live. That's right, ladies and gentlemen. It is February 20th, 2026, one day closer to Christmas. The plastic toys are on the boats from China coming all over already so they can be in the department stores by July. That's right, ladies and gentlemen. Christmas is coming. Winter isn't even over yet. This current winter, and I'm already talking about Christmas. Well, you know they are. You know the stores already are planning on which plastic fake doggy doo you're going to buy this year. What a day to be closing this Friday, this week up this Friday. I mean, what's going on in the markets? In just the news, the fundamentals are driving the markets today. Trump got overruled by the Supreme Court. Overruled. The poly market with prediction markets were right again. They're now predicting the Supreme Court rulings and getting them highly accurate. After listening to the audio from the arguments a couple of weeks ago with the Trump's team arguing that he does have the power for it, the questions the Supreme Court says right here in the Constitution that Congress has the power to do that, not the president. That, like, right there, Constitution. However, there was a law passed. Not Americans don't know. There was a law passed that said the president does have the authority to use tariffs in an emergency manner, and that's why he declared emergency against fentanyl and emergency against immigrants and all this type of stuff. But then he stepped overboard and just started declaring all sorts of tariffs on everything. And the Supreme Court said, "Niet, nope, el no." Said, nope, not going to happen. So we'll see what the remedy is for this. If the U.S. government has to refund all the tariffs, we've got a big problem on our hands, and we're going to see a massive downturn in the market because the government is going to have to print the money in order to return it. The Fed is not going to. There's no way the Fed under Jerome Powell will just go to the banks and say, "Oh, we're gonna ease." Sorry, my mic's in the wrong spot here today. My sound is all right. Let me know. Crypto Unicorn says, "What's up, Chads?" I know there's another comment out there. Connect to Me One says, "No Chad here." Chad-et. I've recently changed the way I view my comments, and I'm always doing them in reverse now. No Chad here, Chad-et. I wonder if Chad-et should have two D's and one T? I don't know. Anyway, welcome Connect Me One to the show. Welcome everybody. Welcome followers from Simply Bitcoin, from the... sorry, Mr. Creator, I can't remember your name. Begins with a B. Bjorn something or other. Day trader, broadcast usually in the evening. Welcome to everyone else that is joining us on these various platforms that we're broadcasting on. I guess I can turn the timer off here since... Oh, what a day. Metals markets driven higher by the news today. You can see the charts behind me. That was the wrong button. It's the right button. All right, as you can see in the charts behind me, we got Bitcoin on the top, gold on it. Bitcoin, 67,000, really hasn't done much all week. As you can see from the chart, let's move to the chart view for now. The top one here is Bitcoin. Let's go to a different time frame chart here. As you can see, the past couple of days, really since February 5th, Bitcoin hasn't been doing much. It had its big come down from the 80s and all that type of stuff at the beginning of February. It's languished. Got all the way down to 59,000, I might add. As Pedro was going to call it there. 59,727, something like that. And it's just been trading in this zone from 71 to 65 and back. And it's been hanging around 67, 68 for the past 2 or 3 days. Plenty of opportunities, as you can see from the chart here. There's plenty of opportunities for day trading. You can see some kind of massive program going on here on the various opens. At 7 a.m., 7 a.m., 11 a.m., 7 a.m. Lots of movement at 7 a.m. On Eastern time and 11. Wow, that's really interesting. This is, oh, it's the 4-hour time frame. Why is it an odd number? That's weird. Anyway, but it looks like somebody's running just a massive week-long algorithm on it, on Bitcoin for the past since the 13th or so. Came on, rose up to 70,000, and then decided, hey, it's going to weaken. We're going to head back down. But look at this pattern. I mean, this is a very distinct pattern here. It says something's up. Something is up here. Come down, consolidate a little bit, move up a little bit. Another big move down in the same 4-hour time period. Move back up, down again. Move back up, down again. Back. I realize that the market is up and down all the time. That's what it does. But this one's a clear pattern. Same pattern of candles. It's very similar. It's been trending down until the 19th. Just yesterday, it decided to break that trend a little bit. What's my co-host name? Oh yeah, Pedro. Pedro's not going to be with us today. He's off today. But Pedro is also calling for much lower Bitcoin down here, once again into the 50s. In fact, there was a good post by Frank Aslam on LinkedIn yesterday. I've gotten sucked back into the LinkedIn hole, so bear with me on that. It's such a sinkhole of time and crap. And the people that waste their lives posting these long things on there, because LinkedIn doesn't pay you. Rumble pays us. YouTube pays us. LinkedIn, no. But anyway, I digress. So Frank posted, in fact, he criticized our guest the other day, Mike McGlone of Bloomberg Intelligence. That was a great episode. Great episode. I posted the video of it, the segment from the show out so it's there for people to listen to. Go back and listen to it. I think it's 17 minutes, 20 minutes, something like that. Go back and listen to it. It's just some of the best alpha in the market in a conversation between Pedro and Mike. It was just great information. DeFi Dude, welcome. Lee, no es bueno. No, I don't know what LI is. Lee. No es bueno. Well, that's the Mexican way of saying it. Oh, yes, no es bueno. The Spanish way would be slightly different. Usted es no bueno. I'm silly on this Friday here. LinkedIn. Duh, I'm just talking about it. Yeah, it's a sinkhole. However, occasionally I have to use it to catch up on some information, see what people are talking about. I do post certain videos there, like our video with Mike McGlone. He has a big following on LinkedIn, so it got smashing views when I posted it on LinkedIn, which helps us out, showing advertisers and potential sponsors say, yes, you should give us $5 a month. But Frank Aslam, whatever, I posted that Mike's crazy, because Mike and Pedro postulated that Bitcoin could head down to 10,000. And everybody's mind was like, what? 10,000? It is possible. And even Pedro said, they talked about it, and they said, it is possible. And Pedro showed the lines on the chart, said if it breaks that one, it's going to come here. If it breaks that one, it's going to come here. $10,000 is possible. And Pedro followed it up by saying, is it probable? No. There's a lot of institutional buying. They want to get in the market. They don't want to wait for it to, if it went to 10,000 next week, they would love to get in at 10,000 and push it there. But they know it'd take a long time to get there. I might add, it only took us 6 weeks to go from all-time highs to 59,000. No, it's longer than 8 weeks. And so his post went on to say that Mike's essentially was talking out of his mind and crazy. But he wasn't crazy. He said, look, the best trade, this was the key takeaway from the show the other day, the best trade in 2026 in the entire market in 2026 was shorting Bitcoin. He said just printed money. He said it's still printing money. Every day it's been printing money. And I follow one guy on X who nails every one of these things. And he said the same thing. In November, he's like, I'm selling Bitcoin, selling all my spot, everything, selling everything, and moving into shorts. And he said, I'm going to short it all the way to 70. And I'll keep adding new short positions, even if it retraces back up into like 95. And it did exactly that. It came down to 70, retraced up to 95. He kept going short. And then this thing popped right down to 59,000. And frankly, Pedro's saying this shit can go lower. Why? Because it can. It can because there are a lot of people doing what? Holding. Just holding. Warehousing that stuff. So they're not trading. That thins the liquidity in the market. It means that there's not enough buyers because they've spent their powder and all this type of stuff. Institutions don't want to buy. They don't want to spend $60,000 or $67,000 for Bitcoin and have to push it to 130 to double their money. In spot. In futures, they're going to make a ton more money than that. They want to buy it at 30,000 and double their money at 60,000. So if they have an opportunity to push it down, you know damn well they're going to do that. And with the volume these guys are capable of, it's easy to do. You know, they can look at the order books on the futures market and see where the orders are and say, look, there's a big one way down there. Let's hit that thing. Let's hit it. And they do it by selling. Say there's 400 Bitcoin contracts to get to a 700 Bitcoin contract. They'll sell those 400 contracts. Sell them all. And then push the price down to 40,000. And then buy the 700 at once in one clip. And they'll do it with an algorithm. They'll do it this fast. And go. That's when you see a candle appear on the chart, and the wick appears, and the body up higher. The wick down appears, and then the body appears at the same time. You're like, what? You're like, what? What? Because that's what they're doing. The algorithm just trades it. It buys the 400 contracts, and then, or sells 400 contracts, pushes the price, clears the order book, gets to that big block, buys them all. Then the price starts going up, and they make a killing. That's what they would want to do with Bitcoin, and it's because they can do it. It's because they can do it because the Bitcoin maxis out there are just spot holders, are holding the bag and not trading. They're not providing enough buyers in the market to keep them from doing it. So it's entirely possible. And Frank went on to talk about that it's irresponsible. It's like, I don't know, maybe he's working on his articles to get more engagement or something. But I wrote back and I pointed out, I said, hey, you know, we're at 126 and Pedro said, we're coming into the 50s. And everyone said, did that, you know, GIF thing, get out. GIF, whatever. Get out. Pedro got kicked off shows. He got muted. They turned his microphone off, all this type of stuff. Nobody wants to hear the bear. But if you're a good trader, you're going to make money on the way down. And Pedro did. And he called it correctly, and he was right. And when I said, was anybody 8 weeks ago talking about hitting 59,000 this week? Or what, you know, beginning of February? No, they weren't. Pedro was. Yeah, part of lunch. So does Bitcoin have more room down? Yes. It will. It will have it. It will have more room down. And it has the momentum down too, unfortunately. DeFi Dude says, corporate treasury adoption will drive new demand and force the ETF crew to move. before 30K? Probably. I would say that's a very valid point. I mean, there's a lot of buyers down low. When you look at the liquidity levels, you look at book map, heat maps, or you just figure it out on the chart where all the orders are. There's a lot of orders down there. And when you look up, there's not a lot of liquidity up high right now. It's all down low. And those liquidity things, just like I said, they act like a magnet. Why? Because big buyers and whales will sell and push the price down to buy larger blocks cheaper. If you sell 400 on the way down, and then you buy 700 down here, you're going to do well. Oh, Bitcoin. Let's look at the details of Bitcoin here. As many of you know, I'm in a class right now. Many of you don't. It was essentially January of 2025 when I was talking to Pedro. Actually, it was just before. It was October of 24 when I said, all right, it's time for me to take trading seriously and get more expertise in this. Do it as a living, which I need to learn. So I started learning from Pedro. Normally, when Pedro's talking and stuff, like many of you, tune him out. But I'm busy doing DYOR stuff. I do all the production for this, the graphics, yada yada yada. And instead I started listening to him, and I was like, aha. Started trading a little bit. Did all right. Could turn a few $100 into $1,000 now and then. But nothing consistent, and certainly not with any decent rules or a proper plan. And I realized that I needed more education. So I identified a trade journal. I looked at my trade journal, saw my weaknesses, and said, all right, I need to plug these gaps in knowledge. And I went and did that. And you see me talking about the long-term trends, which way the month is going, in and out. Get comfortable with your trade to play out to where it's going. Instead of, I brought the meme coin mentality, and that was bad. And so I was not making very much money. It was a good trade, but I'd take profits at $25. I'm like, oh my God, $25, so we could rug pull. Gold and Bitcoin are not going to rug pull. They're just not going to rug pull. And I had that mentality. Anyway, so I learned all that, got back into trading, started doing okay. Had a lot of bad habits, though. Still a lot of bad habits. Would take trades that still had a little bit of emotion left in them, or I didn't understand the market. Pedro said, you need a mentor. You need a mentor that's not Pedro. And so I'm in a class now. Advancing my skills. And it's wonderful. It's just wonderful. It's a futures only class, trading futures, not crypto or perpetuals or anything like that. Just Chicago Mercantile Exchange futures. And that's essentially what I did as a kid. I worked on the Commodities Exchange in New York, the Commodities Exchange Center and World Trade Center for essentially 6 years while I was going to school. And so it's kind of all coming back to me. But I wasn't trading then. I was like the clerk that did everything. And now it's coming back to me, and it's so much more interesting now watching it. Even the Bitcoin future. This is not a perpetual. This is the futures contract, the February futures contract for Bitcoin. And seeing a proper teacher teach me proper methods, and just why I'm not really trading. I'm making a couple of demo trades and that type of stuff, but I'm following his plan to go from working on knowledge to then starting trading later down the line. And there's no rush for me to start trading. I mean, I would like to make some money, but it's better to make it than lose it, right? Right. So it's really eye-opening, and you can probably hear the excitement in my voice talking about it. Hey, Vincent from Nigeria, thanks for joining us. Vincent was asking about futures trading. Vincent, you need a lot. You need to do a lot before you trade futures. Futures trading, you can lose money faster than in meme coins. Faster. A live from Nigeria. Thanks for joining us, Vincent. Vincent has also been playing in the meme coin world. He's trying to hit the 1000x jackpot there. Good luck with that. I gave up on that. In fact, the last 2 projects I recommended in the crypto world both essentially went to zero. One meme coin that had a utility, and then one project that used to be on the banner down here every show, and it went to zero. That's why they didn't renew their advertising contract, because they went to zero. So I'm not good at recommending projects. What I am good at is improving my own skill and talking about it. That's what I'm good at. And I'm finding the confidence more in doing that. Because so long I sat in front of these charts and was not confident at all. And I'm a person that I can stare at data like the Matrix. Like, it just scrolls by. I used to install enterprise inventory systems and stuff like that, where you're dealing with massive amounts of data and trying to find problems in the data, incongruous records, things like that. Find out where things are going wrong during the setup of it. And we get these people, I don't know, multi-$1,000 a week people from, was it Deloitte? No, I don't remember not Accenture, whatever. They were coming in, they were my age, and they were like, well, this is what we need to do, and this is best practices and all this kind of stuff. And I'm like, you guys are so full of shit. I said, just run through this database here, and you'll see the pattern, and you'll find the errors, what's going on. It'll lead you to which user is doing what. And they're like, okay, well, we'll have to contract that out to, a data analysis firm, and that's going to be. I'm like, no, just sit there and fucking run through it for another hour. It's about 500,000 to 800,000 records, and you can just look at each one, and you do it like Matrix style. You just run the Excel spreadsheet, and everything's the same length, and still you see one that's not the same length. They're like, oh, error. And they're not the same. You can't just search for error. They're all different. And they're like, oh, well, we're not trained to do that. Anyway, I trained myself to do that, so I can look at these charts forever. And I love it. And the fact that I'm now able to see. Let me rephrase that. My eyes are opening. They're opening. They were closed before, but I'm just being able to see. I'm at that point where the kid, like an infant's just able to recognize its mom and dad as different people. When the experienced trader, it can look up and say, oh, look, there's Regulus 7 over, coming out of the Andromeda galaxy. That's a long way. It's a big training difference. Vincent says, I want to learn trading from you too. Vincent, that is, like I just said, I am a student. I am an infant learning like this. Mm-hmm. And it's going to be a long time before I can teach someone. It's going to be a long, long time. But we do talk about these types of things on the show. If you get yourself a good data plan, so you can watch the shows regularly and listen to us, work on your English. You got to work on your English, Vincent, and your understanding of the financial markets. That all just takes time. Sitting, watching these charts every day, learning. This is definitely not a signals thing. Like when Vincent, you were talking about meme coins that AI Wolf was talking about and getting in on. He said, if you have any other signals, let me know. And Walter was pretty honest. He's like, yeah, I can give you 10 signals. Maybe one of them will work. 9 are going to for sure go to 0. But that's not the point. The point is that the people that make money aren't the ones that react to signals. They lose money. The people that make money are the ones creating the signals. And I am teaching myself to create signals on these charts by looking at the performance of the chart. This one's gold here. The gold price was down, and then the whole Trump thing got up and gold price went up. Bitcoin, you look at that and say, where is this market going to go? I used to have no idea where it was going to go. I knew a little bit about moving averages. I knew a little bit about volume, that type of stuff. I didn't have anything to look at the big picture. And that's what school is teaching me, going back to school. and I'm so excited for it. All right, can you tell Pedro's not here? I'm just rambling. Anyway, this is good stuff. This is good stuff to talk about, especially on this Friday. I haven't looked at the social medias yet. My TV is dying again. Ugh, this is so frustrating. Let's see if we can check the numbers here. We got 10 people watching us. Thanks to everyone that's watching. Really appreciate it. Hey, I'm here. Got questions? Let's talk. Gold popping off here. We almost got back into this market. It's trending up on the since about 12:20 this morning. You know, I had a good week. I had a positive week in the small trades I've been practicing. Whether it's demo money or real money, makes no difference. Makes zero difference at all. What's important is that you don't overtrade. And I'm ending the week with another week with a positive number on it. Since I started this back, I've had one negative week, and I made a colossal error. And so that wasn't good. But since then, all the weeks have been good. They've been good, and like I said, just little bits amounts of demo money. Although I did make one trade the other day on the demo account with like 5 full, not the micro contract of gold, but the full contract. And each contract of gold, you control $500,000 worth of gold. Made 5 of them, a $2.5 million order. It was a little crazy. I mean, it was like you're down, like one tick, you're down $50,000. Like, whoa! Not tick, but whatever it is. $1 change in price, you're down $50,000. You're like, whoa! I get done with that trade and reset the demo account. Boop, reset. Anyway, but Bitcoin has been slow here. As you can see over on the great graphics machine, Bitcoin only trading 47 billion in the past 24 hours. That's light. Normally, an average day, we're at 60 billion when I talk about it on the show, or when Pedro talks about it on the show. 60 billion. On busy days, it can get to be 100 billion. But we're at 47 billion. On days with no volume, like it's a holiday, or a banking holiday or something like that, we usually have about between 20 and 30 billion dollars volume. There's still plenty of chads out there trading, even though it's a holiday. But the institutions are off, and so they obviously have trading desks still watching this. But the big market makers in every, or big traders at every institutional bank and stuff are generally off, so they're not going to run their algorithms. Their clients aren't calling saying, "Get me in the market, get me out of the market." And look at that, gold booming right now. Getting ready to get back to 5,100 here. I had a good demo trade in here today. Getting in right about here. See this bend in right there, and selling right about here, right before the big run up there. I got in about there. I took advantage of about 66% of this of rise in price there, from here to here. And as they say, I'll buy that for $1. Futures trading and Forex trading, which is better to learn? I can't tell you on that. I've known a lot of when I used to work in New York, the guys that I worked with starting at 8 o'clock would get to work at 4 o'clock and trade the foreign exchanges in Europe, in Brussels, and in London. And they had a good time doing that. In my class right now, I have the opportunity to trade foreign currency futures. You can trade the as it relates to the dollar, like the British pound to USD pair. You can trade the Japanese yen pair. In fact, I think the yen was a good trade today. Let's look at the yen. It's crude oil. One of the things I had to do was identify Golden Cross and Death Cross. Here's the Golden Cross over here. The moving average, one's going up, and then the Death Cross is when it comes back down, and I put a skull and crossbones on it. I thought I was pretty cute there. I'm doing that. All right, let's find the yen here. Let's see, 66. Where is my 6J? So the daily chart in the yen. Yeah. This would have been a good trade today. So the daily chart coming down here. It's moved a lot in one direction. That's what you want to see. Let's. I have no idea why I came down. Both, Vincent. Both. But as you can see today, let's go to a 4-hour chart. A couple of 4-hour candles that just came down, so there was a good trade in there. Coming up against this 200 period moving average. If it bounces off that, could go for a nice rise. I'm just starting to pay attention to the currencies again, especially the Canadian currency. Look at it sinking like a dog. Did come up for a while there. Got as low in December. That's the 71 US cents, 70 cents to the US dollar. Came back up to 74 cents. It was like everyone thought, we're on the roll, and they realized the Prime Minister's plan had no substance to it, and it's starting to sell off. Anyway, I got sidetracked with that one. That's still moving here in gold. It's the end of the day. It's Friday. It's 1 p.m. Volume is still strangely good in gold here. Algorithm still running. That was a nice move to be on the correct side of. Been on the opposite side of those many times in my life. Not anymore. Let's find out exactly what happened with Mr. Trump here. Supreme Court strikes down Trump's tariffs, rebuking President's signature economic policy. The Supreme Court struck down a huge chunk of President Donald Trump's far-reaching tariff agenda. The law that undergirds those import duties does not authorize the president to impose tariffs. The majority ruled 6-3. Chief Justice John Roberts delivered the opinion of the court. Justices Clarence Thomas, Alito, and Kavanaugh dissented. Well, no shit on that. Shit on that. Clarence Thomas, Samuel Alito, and Brett Kavanaugh, for you non-Americans, are very conservative, right? Not right, crazy right wing like that, but just conservative leaning people. Very what's called, let's call them right wing. Normally, though, they are strict constitutionalists, which means normally they follow the rules of the Constitution. Like in Canada, they do things that say like they have a clause in their Constitution that says, or any whatever else is common in a modern democracy or something like that. It's like so nebulous. You're like, what? So they treat it as a living document. They're like, well, that was old-timey stuff. That doesn't mean anything anymore. Now we can restrict speech and take your firearms away. In the U.S., many of the Supreme Court justices are what's called strict constitutionalists. meaning that if it says it in the Constitution, there's no opinion. There's no, like, well, maybe what times are different, or another part of the Constitution activates it, but this one, like in Canada, they're like, it says no here, but down here it says maybe. It's kind of different, and we can't discriminate against this segment. But I'm like, it says no here. Yeah. In the U.S., that's not how it is. So the judges generally that are more conservative follow the Constitution exactly. And it clearly says Congress has the authority to make tariffs. And like I said earlier, the Congress did grant the president in times of emergency the ability to change tariffs. Congress, in the past, when they made these laws, didn't sit as much as it does now. The communication was slow. So they said, all right, the president, when Congress is out of session, not sitting, whatever, can do certain things. And Trump took that to do all sorts of things. But it's interesting to say here, they struck down much of it, not all of it. The Supreme Court on Friday struck down a huge chunk of President Donald Trump's far-reaching tariff agenda, delivering a major rebuke of the president's policy. The law that blah, 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 blah. The ruling is a massive loss for Trump, who had made tariffs and his asserted power to impose them on any country at any time without congressional input, a central figure of his second presidential term. Chief Justice John Roberts delivered the opinion of the court. The decision noted that before Trump, no president has ever used the statute in question to impose any tariffs, let alone tariffs of this magnitude and scope. To justify the extraordinary tariff powers, Trump must point to clear congressional authorization, the court wrote, and he cannot. And they didn't. They're pointing to the parts that got struck down. There are some parts of it that were ruled not okay, but he didn't use them much. 99% of what he's doing is just retaliatory things. What he should have done, the problem was Chuck Schumer in the Congress, or in the Senate, and what's his name, whatever, or Booker or whoever. They were just saying no, because what Mr. Trump wanted to do is wanted Congress to pass one of two things: either to clearly give the president the power to do tariffs, or to pass a tariff package themselves. And the House would have done it, but the Senate would not have. They don't have enough Republicans to override the filibuster. Let's see. The ruling was silent whether tariffs that have been paid under the higher rates will need to be refunded. The sum could total $175 billion. I think it's gonna be more than that. Kavanaugh wrote in his dissent that the refund process is likely to be a mess, after predicting that the short-term impact of the court's tariff ruling could be substantial. Since retaking the White House, Trump has rapidly reshaped America's long-standing trade relationships by imposing a staggering array of import duties that have touched nearly every country on earth. And then it goes on to talk about the law that Trump used, that IEEPA. In which, it is, to summarize it, essentially says it has to be a national emergency. And Trump tried to say the fentanyl thing is a national emergency, the immigration thing was, all this type of stuff. And the Supreme Court is like, not so much. Not so much. Anyway, so the market moves. I do have to say this article, or this paragraph, is correct, in which it says it called the process chaotic, and it was very chaotic. Even being where I am in Canada now, the Canadians are like, well, what's it going to be? Is it 30%? Is it 50? Is it 100? What? 5%? No percent? What's it going to be? It was very chaotic, and that chaoticness does what? Instability in the market. Nobody loves that. The market doesn't love it. Traders don't love it. We like things stable. I should say the big banks and everybody, the people with all the money, they like things stable so they can predict. When things get out of prediction, out of whack, they can't predict them well. Make less money. I gotta say though, the tariffs, from my personal opinion, were a good thing. The US is the biggest consumer market on the planet. We just buy shit. You can't believe the number of Amazon boxes that show up at our apartment building. It's unbelievable. And the consumer economy is just more than it is in other places. Even like all of Europe now has a larger population base. All of America just buys more shit. And so we're the number one market that people want to sell to and get a foothold in. People say, oh, we're gonna avoid the US because of this, and we don't like Trump and all that kind of stuff. But their investors in those companies are like, if you say that again, you're fired. And we'll get someone else because we can double our sales, triple or quadruple if we get into the US market. And so when they say, oh, but now there's going to be a 15% tariff, they say, so what? So what? Get our products in there. Like most products that are commodities are very well regulated anyway. You don't see a lot of people saying, this did happen, canola oil from Canada to China. It'd be taxed, then it's not taxed, then it's taxed, not taxed. In the US, we're like, oh, we're going to tax corn from other countries and meat from other places, blah, 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 blah. But 99% of the stuff that's commodity is very thinly, the margins on it are small, so you can't put big taxes on them. They just stop coming in, and then our prices rise and inflation happens. But with most of other stuff, coffee mugs from China. I'm sure this came from China, whatever. 20% tariff on it, or 50%. So what? So if this costs $6 instead of $4, but a gazillion of them are sold, and we raise $1 billion in taxes from that. It's $1 billion in taxes that you and I didn't have to pay, or can be used to pay down our debt, or can be used, however. And as much as people gripe, they're willing to pay it. And for the U.S., this is important because we need to bring our manufacturing industry back to the U.S. A lot of people say, Tom, can't be done. And it's not even efficient anyway. We shouldn't do it. But we should do it we shouldn't do it if everyone is living in unicorn farts utopia and every country has a benevolent government and everyone wants to be happy and of just like one world order. But that's not how it is. We got China wanting to take over the world. We got Russia wanting to take over the world. Europe wants to just give up the world and just say, oh, screw it, we're done. Turn the lights out and let everyone else come take over. And so we have problems with supply chains. And we need to have every country needs to have its own supply chain that is critical to their needs for whatever they want to set their goals out. The US's goals are clearly economic prosperity and military strength around the world to guarantee that economic prosperity. And so we need to make sure that our military can operate if other countries say, can't have that. We can't even fly our F-35s without foreign electronics. And I don't mean like from Britain or France, I mean from China. Anyway, the tariffs, in my opinion, were a good thing. A lot of things had a one-time hit when the price goes up. But that's just a one-time hit to inflation. Inflation has run since 2019 in the United States, Canada, and much of the Western world has run at 30+%. Think about that. If you had $1 million in 2019, it'd only be worth $700,000 in the same purchasing power now. How about that? The governor of Illinois the other day made a big deal about growing the Illinois economy. Big deal, big speech, feel-good speech. He took cues from Mark Carney and just invoked warmth and love and all this type of stuff. And like, oh, we're all going to just sing Kumbaya and get along together. And he said, not only that, but in Illinois here, since I took office, our GDP, $881 billion, and it has risen to $1.3 billion. 1.3 billion. No, 1.2 billion. Whatever it is. And he's like, we've added, half of it back onto it. It's like, it's amazing. Our policies are working. Add inflation into that, and the economy has actually shrunk in Illinois. And related to their neighbors, Wisconsin didn't have a good one either because they had a lousy Democrat governor too. But Indiana's much larger growth. Missouri, much larger growth. Kentucky, much larger growth. Like, grew more than inflation. Illinois shrunk. Yeah. getting going here. See, this is why I need Pedro here. Anyway, so the Supreme Court strikes Trump's tariffs down. Big news. Pedro was talking about another article here. Let's see if we can find the news. Blue Owl? Is that what he called it? DeFi dude, if you're still listening, do you know anything about a firm shutting down called Blue Owl? Blue Owl Capital? Let's see. Let's see. It says Blue Owl, one of the bigger firms. Pedro told me that they were shutting down and just giving everyone their money back, and saying it's the top of the market. It's best for us to stick. The $1.8 trillion private credit market is facing a pivotal test after Blue Owl Capital moved to restrict investor withdrawals from one of its retail-focused funds. Oh, that's never good. An action that reverberated across alternative asset managers and reignited debate over liquidity, valuation, transparency, and systemic risks. I can see this being a problem. Transparency and valuation of the private credit market. That's one of those things that's you can't value it till you sell it, and selling, private credit instruments is not transparent at all. Essentially, if just say I had a really big company and I wanted to borrow money to do something, I could do so from a bank, or I could go to people that give out credit, like Blue Owl Capital did, and nobody has to know the information between Blue Owl Capital and me about it, unless it's a common product that they sell that people trade. And since that's usually not the case, those private credit arrangements are just not very transparent. So the valuation of that is tough, especially when you have people playing the valuation game. One very notable famous person for that, none other than Mr. Donald Trump. He tells the IRS it's valued at this, and it tells the banks it's valued at much higher, so he can borrow more money. Going to tell you neither one is illegal. You have to, if the IRS says what are these values at, you got to provide the legal documents to do so. But for banks, he'd pump them up and make them sound much larger than they are. Valuations are difficult on things that are not traded by the public. Let's see. Blue Owl stopped offering quarterly redemption opportunities for Blue Owl Capital, private retail debt fund, and instead will return capital through periodic distributions funded by loan repayments, asset sales, or under the previous tender. Sure, investors who to redeem up to 5% of their holdings each quarter. Let's not offer that. This is a complicated fund they're closing down. Pedro told me that the whole company was just shutting down and saying, we're done. But it looks like they're just liquidating one fund. Further, the payout plan for the fund holders would be about 30% of the fund's net asset value to all shareholders within 45 days. I see. The decision follows rising redemption requests and mounting liquidity pressure within the private credit markets. You know what? That's a good point. Our over on the great graphics machine here, we usually have a stable coin based on home equity loans. In fact, one of our viewers took us up on it and did their home equity loan through usually they're up there, but they're not now. Look at that. There they are, Figure HELOC. That's essentially a private credit market. It's not a bank. You buy their stable coin. They guarantee you a certain percentage back, say 5%, because they're lending it out at 7%. Simple. Their market cap, 15. Last time we checked on them, they were a $12 billion market cap. So they're up $3 billion, and probably that's about $1 billion a month. I think it was 3 months ago that we spoke about them. And their price is always around $1. They keep the price there, and the more they sell, the higher the market cap goes up. But the private credit market, Pedro has been talking about this. He's been warning everybody about this, that some part of Wall Street is going to go soon. And the question is, what is it going to take with it? And this, apparently, the private credit market is the first to suffer. And what happens every time, just like in 2008 with the mortgage crisis, is people get one idea about how to package something up, and they're like, ooh, we can make money trading this. And they go about it well, and then it grows, and some people going about it not well. And then there's failures. Just like with crypto, FTX, all this type of stuff. 90% of what was going on in crypto is completely legit and normal, but FTX fucked it up for everybody. And that's what happens in these things too. It's a new product, or newer products, newer way of trading, not as well regulated, not as much transparency, and it really, really sucks balls when someone screws it up. And then other people, what happens is essentially a run on the bank. We stopped runs on the banks by saying everything's insured. So people don't, they're like, all right. So there's no runs on banks anymore for insured deposits of regular people. There's runs on banks for corporation accounts. But in these types of things, all it takes is one bad apple and people start getting a little doubt. And they're like, remember, I've talked about risk managers at length here, ad nauseum, however you want to say it, and they don't change their minds over short periods of time. They change them over long periods of time, perhaps their entire career. And so as soon as they see the risk increasing from this, they're like, better reduce our exposure. Not get rid of it, but they're like, let's move 10% of our holdings out of that and put them into stuff with less risk for right now, reevaluate, and then redeploy. That's how that works. All of a sudden, 10% comes out of even the good firms. And then they got to start calling in loans. They're like, we got to start paying people back because they're redeeming their stuff. So you got to pay your loan off. So all of a sudden, like, they call me and say, I borrowed $50 million to, build a big addition to my factory. And all of a sudden, they're like, you had 5 years to pay that off, but can you have it to us by Friday? And you're like, no. So you quickly call 10 other private credit companies, and they're like, hey, we're in the same boat. Everyone's taking 10% of their funds out. We've got to call in 10% of our loans. And then you see the toilet going, and unless someone steps in to say, all right, hold it, we'll provide temporary liquidity to ease this. These markets come to a grinding halt. When they come to a grinding halt, you can't value anything, can't trade anything, can't get your money out. Things go to zero. Companies go bankrupt. It's bad. It's bad. And it's possible. I'm sure Pedro, if he's listening, is going, yes, or no, it's different. But it's possible that this is the tip of the spear in an undoing of part of Wall Street. And there'll be another bill. Private credit will be regulated. Yada yada yada. Have to report to the SEC. Blah 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 blah. Which isn't a bad thing. The more info that gets reported to the SEC, the more people can crank through them on databases and point out weaknesses, or just short those companies if they're public. Well, yeah, it's Blue Owl public. Owl, it is. All right, Blue Owl, let's look at their 6 month. Yeah, they've been coming down. They're at $17. Now they're at 11, dropping 10% today. Let's do how much time we got on them. 5 years. They're back down to essentially their launch price of $10. So they got as high as 26, split adjusted. Oh, no, not split adjusted, sorry. And they started coming unglued Well, it's been a while. But, Pedro has been talking about this for a while. He's been talking about, it's been at least a year he's been talking about the markets coming to a grinding halt. Doesn't mean all the markets. Doesn't mean your pension and all that stuff is at risk. But the mortgage crisis, when that exploded, it exploded people's mortgages. And we saw the resulting problems with people losing their homes, all that type of stuff. Construction companies for new homes came to a halt, laid off their employees. It was a big financial mess all around the world because everyone copied the Americans. Oh, that's a good idea. Let's put shit in D-rated investments in with A-rated investments and sell it as one. And say it's good and not say it's bad. And if this happens too, what happens when private credit goes under, companies come to a halt. Companies go out of business, or they just declare bankruptcy, continue operations, but declare bankruptcy. And then all sorts of supply chain things happen that are bad. That's always bad when companies that rely on these private credit markets, which are mostly, I would say mostly, not the big companies of the world, the big large enterprises, which are all the medium companies with 500 employees, 1,000 employees, 250 employees. Larger companies may have billions of dollars in the tank for the future. Medium-sized companies have, not as much, especially if they're expanding. If they're expanding, they usually have very little cash until they collect that. Interesting day. What else did Pedro have talked to me about? The PMI was today. Let's look at the Forex Factory here. Personal income, personal spending, flash manufacturing PMI, flash service PMI. Actually, all kind of came right in normal. That's why we didn't see the market move a lot today from that. President Trump spoke at 12:45. I don't know what happened with that. You know what? This music has been on the same music long enough. I never retweeted the show. Normally I retweet it on my account. Oops. Let's do that right now. Actually, let's do it this way. Oop. Share. Post this. Talking about the markets today, markets and news today, Bitcoin, gold, currencies, you name it. All right, let's put sorry everybody here while I'm quiet, just doing a little social media here to get some viewers here. Realize it's Friday here, lots of news going on. People want to take the rest of the afternoon off. Now let me retweet that on the DYOR profile. That's not what I wanted. Oh, are you kidding me? No, I'm gonna have to do it on my phone. Wants me to re-log in, and that's a lengthy process. Got. Thanks for. Hold on a sec, ladies and gentlemen. I'm just trying to do a little social media stuff, retweeting here. Sorry about that, ladies and gentlemen. I was just doing a little social media, trying to get the word out about the show here. And X was so kind to log me out of my feed here on my desk, so I had to do it on my phone here. It took me a minute. As I was saying, PMI was today, and everything kind of came in normal. New home sales were up a little bit. PMI was a little bit under, but percent change is negligible. So not much happened today. I'm looking through the numbers from the week here. Anything big? Natural gas storage was down. Okay, whoopee. Housing starts were up. It's good. You saw the copper market respond to that. Building permits pulled 1.39 million. The question is, how many were actually granted and approved? All right, that's enough of that stuff. Let's get back to it here. Gold finally said, that's it. We had enough of the run up here, and the weakness finally came in, and it is retracing from that nice pump that it had earlier. You know what? I don't want that chart. I want what chart do I want? This one? Gold on the 1 minute coming down to the 200 period moving average. This is the one, Bitcoin and gold at the same time. Yeah, Bitcoin languishing. Oddly enough, the volume on Bitcoin is still hanging in there. This is volume here for Bitcoin, still hanging in there on this Friday afternoon, which I find to be odd. Gold, a nice pullback, 590 to 572. Once again, see, it's Friday, positions being closed. Approaching the end of the month, probably next week people will be trading. Let's see, they're trading. What are we trading right now? April? Let's see here. Where is that screen? Gold. Yeah, we're trading the April contract right now. So we will not switch contracts at the end of this month. Next contract will be the June contract, which will start trading the end of March, beginning of April. All right, what else we got going on here? Let's look to see if there are any afternoon trades here. Cryptos are generally up here today. Bitcoin up 1%, Ethereum up 1.5%, XRP. Wow, even XRP has a green arrow over here. Let's look at XRP real quick. $87 billion market cap, $2.5 billion traded. That's all right. They're down from a high of 350 or so. Got as low as 179 or so, 186, 184. Need to have Oscar on the show to talk about A video set to private on DYOR's YouTube page. Interesting. Here's a good example of what I was talking about there. The big sell-off here. Let's look at it in terms of the 5-minute chart instead of the 1-minute chart. Your simple doesn't. What? Let's refresh that page. And it refreshed to Bitcoin only. Love that when that happens. Let's go to gold directly. Apparently, they stopped trading gold on the Chicago Mercantile Exchange. Your symbol does not exist. Something funny's going on in the markets. Good thing I don't have a trade on. I've never seen that happen before. Let's look at Ford. I think TradingView is having a problem, not the markets. Won't even pull up Ford stock. Nothing. Well, if that isn't a sign to end the show early, then nothing is. Have it on my notes. Finish show by talking about Bitcoin, precious metals, and cryptos. Nothing going on. Just go to tradingview.com, see if that even works. Tesla stock works. Tesla retracing a lot. When it's up to 500 on Christmas, back to 411. All right, let's try gold again. GC futures. Gold futures on the COMEX. Now it's back. But it is not my chart. Strange. All right. Where was I? Oh, for fuck's sake. Yeah, this I was talking about here when it dumped off here. The end of the day is coming. People, there's still some movement in the market with decent volume, so they're still trading actively. Coming back from lunch. Looks like there's liquidity down here in this area. And so someone just took the market down. Maybe someone, a group of people, group of banks, took the market down, sold off really quickly, and then bought a big chunk down here where there was liquidity and went back up. Very quickly, explained it if you came in at the end of the show, at the beginning of the show, I talked about that at length. Looks like it's a rinse and repeat situation here. Market definitely in for a little gold market definitely in for a little downturn. Let's have a little fun here. Looks like I'm gonna miss the move. Why is that set at 3? Yeah, I'm missing the move there. I'm not going to jump in. I was looking at this in the moving average, and I said, oh, on this demo account, I should drop a sell right here when I was thinking about it, and it dropped from 589 to 584 almost immediately. I was slow on the draw there. Cost me $50. Look at the downturn, too. Now, this is really weird. I have one chart showing that this is going up, and another one's showing that it's going down. 591, which one is 5-minute candle, 5-minute gold futures, gold futures. Some kind of imbalance going on there. Oh, this is weird. The trading view chart is behind. Like, watch, this is gonna go up. I'll just buy one, execute it. I don't understand why it's not executing. Just buy it at the fucking market. See, it executed me at 5094, which is $10 above the market. Yeah, TradingView is jacked up right now. If you're using TradingView, don't. That was really weird. Well, that's not good when that happens. $5092. I'm looking at gold. The April contract. I'm looking at gold, the April contract. The price is way different. Yeah, TradingView is like a minute behind. Yeah, look, it's going to go up into the 90s here. Charts don't even match well. 1 minute chart, 1 minute chart, gold futures. You know, this is the, let's go to the MGC, the mini contract, see what's going on there. That's not the same either. 5087, 5092. Which one is first? It's gonna go up. It'll go up. This should go up to 597 over here. Let's see if we can sell at a limit order there and see if it works. It's the weirdest thing. Sorry, everybody. I was trying to look through the charts to see if we could do any nice demo trades. And the TradingView chart and my brokerage chart are not even close. I mean, they're so much out of sync that if it was real, the arbitrage people would be going absolutely crazy. It's like it's not even the same. There's a whole section of, they're starting to get closer again. Starting to get in sync. Watch, this is going to come up to 90 here. moving averages aren't the same. What the F? I don't know. I think that's a signal to put this away for the weekend here and get on with Friday. Needing a little lunch here anyway. Oh, you know what? That's what I wanted to show everybody. Let's see. For those of you watching on YouTube right now, I'm gonna end that stream. Thanks to everybody on YouTube for watching. Really appreciate it. Not big viewers, but common with what's been going on lately over on YouTube and them just derating anything to do with our industry. Not advertiser friendly. Literally, all we do is reach out to men with disposable income between the ages of 25 and 45. I mean, it's the ideal demographic, but oh no, it's not what advertisers want. Yes, it is. Anyway, so for those of you on YouTube, thanks a lot. The stream is going to end now. For those of you on other platforms, it's going to keep going. We'll see you next week on YouTube.